Car lease tax write-off secrets revealed. There are two things certain in life, death and taxes. And you can't miss both, but one thing you can be sure of, you can save a whole lot of money if you know how to write off your car lease. I'm Geoff, creator of FindTheBestCarPrice.com, and in this video, I'll tell you the secrets to writing off your car lease from your taxable income. Now, I'm not a tax professional, and tax laws may differ, so be sure to consult your accountant before making any deductions. Meanwhile, here's what you need to know. What is a tax write-off? Let's start with the question, what is a tax write-off? A write-off is basically a deduction on your taxable income. This means, if you've leased a car for your business, you might be able to treat its usage as a business expense, allowing you to deduct a portion from your business taxes. A proper car lease write-off may potentially save you a huge amount, so let's talk about doing it the right way. The two methods. The secret to a proper car lease write-off is to know exactly what method of deduction you will be using. There are two methods when it comes to determining your amount of reduction. First, you can use the standard mileage rate, and second, by calculating your actual expenses. So how do you know which option to take? Standard mileage rate. If you use your car for long drives, or drive it frequently, then using the standard mileage rate is the better option for you. If you choose to go with this method, you'll need to keep a detailed log of locations you've been to, explaining the use of your mileage. You'll need to prove to the IRS that you've recorded all those miles for the purpose of your business. You have to track your mileage and keep a record like gas and maintenance receipts. When using this method, the deduction amount is based on the number of miles used for your work or business. For example, if the IRS standard mileage rate is at 58 cents per mile, then you'll multiply that times the number of miles you've driven in the vehicle. Additionally, if you choose this method, there's an IRS rule which states you have to continue using this method all throughout the lease period. So if you're not sure, do consult a tax professional for the standard mileage deduction rates and calculations. Actual expenses. Now let's consider the second method. To calculate your actual expenses, you'll need to sum up the actual cost of owning and operating the vehicle. This means all costs associated with your car lease. When you choose this method, you may deduct costs like lease payments, license fees, gas, maintenance, repairs, parking, tolls, and insurance fees. So if you use your car 90% of the time for business, you can deduct 90% from these total costs. To determine which method works for you, it all depends on how much you drive and what type of car you own. In a nutshell, you should use the miles calculation method if you frequently drive for business purposes, and go for the actual calculation method if you'd rather cover various costs. Car leasing and taxes. In general, if you plan to use a car for business purposes, you can save money on taxes by leasing instead of purchasing the vehicle. The secret is knowing which method to use. Just remember to consult with a tax professional. For the best deals and car prices online, visit my website, FindTheBestCarPrice.com. I'm Geoff, and I hope you learned something from this video. Don't forget to comment below if you have any questions, and subscribe for the latest videos. Thanks for watching.